Thank you so much joining today Credit Union channel. I'm from the Asian Confederation of Credit Union, Ranjit Charachi. Today's session is a principle of good governance in financial cooperative and credit union. This is the most important session, I believe. I am sure you will also agree because it's a burning issue and it's a very crucial. It's challenge the credit unions, everything's uh, want to do to maintaining the good governance. However, most of the Asian financial cooperative credit union, preferred credit cooperative, has been regulated under the general cooperative law. We can see there is a lot of the issues and challenge to maintain the good governance. Our session is to highlight the issues and the problems in the good governance. So let's see to go to the good governance about definition. Good governance definition is very simple. It is a process, looking, structure, and how do you information. Use of directing and overseeing the management of the financial cooperative. This is all about big issues because it's not really happening today. Architecture of the good governance will stability is very important and firmness is very important and solid. You can see the visuals it showing ability. The good governance go another definition. It encompasses the means by which member of the board of directors and senior manager are held accountable for their action for the establishment and implementation of the oversight function and the process. It's quite large. It's individual and organization how to maintain. This is all about governance frameworks. The purpose of the governance frameworks, three things: to ensure the safe and sound of the primary society membership, and to ensure the good governance and sound financial management. So we have a cooperative act of other country credit union law, and under that there is a regulatory requirements and regulations, sound business practices, which is not much deployed in Asian countries, but ACCU has introduced various best practices. You can integrate it as your self-regulating and guideline. We have a memorandum of article bylaws. It's an internal policy and it's a internal law with the credit union basic skeleton to how do you manage the financial institution and the policies to run the organization, at least organizational policy, financial management policy, product and services policy, planning policy. I will explain so forth, and each activity for proceedings. So kindly recheck with your management whether you have this type of the whole policy and proceedings. I'll go to the external regulation. It's a cooperative law. Some country has a deposit insurance, uh, the law, and deposit guarantee corporation, stabilization fund, which is applicable, and the similar things in the federation also can have a law. Internal side, articles of the incorporated bylaws. It's also very clear vision and missions and value of the organization. These are guiding the people to organization and board policies on various aspects based on the vision and mission and strategies and strategic plan at least to 3 to 4 years or 5 years, annual operational plan and management policy and procedure. While we see this one, then you can see organization being institutionalized. People are running the organization directing the organization within that framework. So if you want to go beyond that framework, so it is a part of that governance. There are three principles of the good governance: it's external governance, internal governance, and individual governance. I will go so forth very quickly explaining. I'll put everything in the one frame. So this is, we can see, external governance, internal governance, and individual governance. So there are various aspects on external governance. It's transparency, compliance, public accountability. Individual governance, structure, continuity, balance, and accountability. And individual governance, integrity, competence, and commitment. So you can see there are four areas to here and three areas. So I will go one by one. So now you can see the basement, it's below. It is a core foundation of the principle, attitude, and visionary, honesty, courage. This is a sacrifice. It's a kind of whole organization, even the members, staff, is entirely very ethically run the business. I'll go one by one very quickly. I'm not going to explain transparency. What does it mean in transparency, compliance, and accountability? I think transparency is, you can see, it is how you communicate with your member network, what kind of communication channel you develop to members to know what's going on, and how do you report into your regulators in your organization. Honest communication. It is good and bad both, and full disclosure, not too hiding. And another one is a transparency, is a financial statement. When you are preparing the financial statement, and we have to follow the acceptable accounting principle, so then everybody is aware what we are talking. We are comparison is to apple, not apple to pepper. So this is maybe papaya. So then it's very important part. I think most of the Asian country has not very clearly demarcated that on financial statement classification. And also we need to ensure the credit union maintain the international standard for the safety and soundness, or industry standards. It's not the your own. When we look at the financial cooperative, also in the business, it is an industry standard. In the banking sector, has to look at what are the compliance, it's the law and regulations. And then go to the reporting back to the audit report to the members, at least within the 90 days. But it's very important, full details to members, auditors, management reports, and maybe information has to be very clearly identified. But most of the auditors, cooperative department or cooperative government auditors are doing, and they are not do the full disclosure where are the risk area. Because of that, they a lot of members exposed to the higher risk, but it's never explained that. Compliance in relationship with the auditor and the institution. An auditor has to be at least to change it frequently, around 2 to 3 years, and that is very important. And also, board of directors expected to comply with the letter of the regulations. Uh, what are the within the country? This is a part of the compliance. And public accountability is a different issues, auditors relationship extremely, and to maintain and following that model. We'll go back to the internal governance sector. There are four areas: structure of the board of directors, continuity of the board of directors, balancing mean the compositions of the where they have to electing, and accountability part. Let me the board of directors, when we select, they need to have a very clearly internal policies, the board and management very clearly. What is the board role? What is the management role? So then it will not going to confuse, then it will overlap. So board policies has to approved, and then board is and monitored by the board, and then proceedings are developed by the management and monitored by the management. So this is a senior management responsibility that makes sure in good governance. When you look at the board policies are on financial management, good governance, then about employee satisfaction and competitive position and management staff satisfaction. So we cannot achieve this without having proper policy framework. This policy framework will ensure the board of directors to good governance. So the financial management need to have a policy, then board is oversee. An organization and development policy with the vision and mission and value, so board will oversee. Human resource management policy, performance appraisal, productivity, and very important, planning process and product and sales. This is how we need to look at and then go to the structure. General meeting of the membership adequately promote to ensure sufficient of the membership participation. So that means our board of directors electing, there should be a adequate number, general assembly. So large cooperative, around maybe 20,000, 30,000, 100,000. So that's what they have to look at structure and representation. I think currently experience the best number is the General Assembly 200 people. So we have to look at representative membership, General Assembly, so that they can have a very good discussion, business decision. Another one is a board of directors composed with the of number 5 to 9. Some of the organization has a 15, 20, 21. I don't see that's really the board of directors. So let's to make sure that a number of board members also very important to maintain the good governance. Another one also, continuity of the board of directors is not forever. So we have a very clear term for the 2 years. Maybe they can elect it consecutive 2 years. I think that's type of regulatory framework and internal governance policy will bring the new blood, new organization, new ideas. If not forever, I have seen my experience a lot of the country having a same person running the organization forever. I think that's not the best practices. I'll go to that another one, structure in the General Assembly who comply with the standard individual members should allow so nomination. So it's not that everybody can be a candidate. So there should be a election committee, good standing member who has been involving the business, who has been a certain number of years. So then they can be selecting process and they can disclose their qualification and they then look it for their ability and time. So board of directors encourage general members to attend for the board of general assembly. So the structure is a very important part. Continuity, the board of directors to create a strategic plan to become a very competitive of the organization. The board of directors need to have a succession plan. So that is what I explained. Every board members has to step down after number of 2 terms time. So then that is a very important, I think, huge, big issue in the, but nobody want to bring it to that as a silent to the general meeting or maybe not bring it to the main agenda. Every credit union need to have a disaster plan. It is the kind of recovery plan in case of the flood, in case of fire, in case of some other cyclone, maybe nowadays in the health disasters, epidemic we having. So there should be a very clear plan about the continuity of the business. The balancing that reflect the board of directors in the geographical representation, age representation, different skill representation is a very important part of the representation. So then every perspective, the board can see their decision. Another one also very important, depositors and borrowers both is not only like a banks, like a stakeholders, investors are coming and clients. No, we need to look at a both. So good standing members is a good borrower and good saver. So we have to look at the both sides here. Accountability is very clear. The board and management is accountable, should be a very clearly, and consequences and action they have taken. I think there are various cases, number of cases. The board of directors has taken a very, very serious wrong decision. Because of that, the whole credit unions collapsed. But there is no consequences, no action. That is a very, very bad and very sad situation. Board of Director duties to the management to establish a policy as a monitoring its implementation. It has to be very clear what is the demarcation of the board and management. And also we need to have records to make to the accountability to the bylaws and policies. This is the very important component of the external governance. I think we'll go to the individual governance. I believe this is the most difficult and sensitive area for the individual governance. There are three components: integrity and compliance and commitment. Let's get the integrity. This is a code of conduct. It's very important. I think we have to build some code of conduct now. There are a lot of issues are coming: board of directors, malpractices, nepotism, misuse and abuses, and the treatment for one credit union. I know very well. Father chairman, wife is a manager, and son and daughters are the staff. So how it's a family? It's not only one country, many countries. How to avoid? So that's kind of code of conduct. I think the cooperative regulators also never look at this matter. They think this is a democratic organization. No, it is not. And the directors and managers are non-criminal is very important. Records, bankruptcy record, and very before they be elected. Any group of directors want to apply the loan, they have to go through the same process. The board members should not participate in a decision making. It is a very important part to adapt to the non-voting. So it has to be very clear. And same way, immediately family members should not getting the privilege, and has to be closely, not only the board, even a senior management has to be very clearly and has to disclose separately what are the type of loan they have get it, and whether they have uh, paid on time, and whether they got it the proper interest rate, and whether they have given to the what is called the collateral. So we have to look at it very clearly. And same thing, if the directors or its related party is become a delinquent, the board is not eligible to still sit in the board. So this is how I visualize the integrity part. Competency, we know that the banking business are getting so sophisticated and beginning big and bigger. So board of directors decisions are taking the severe decision of the members' money and safe and sound. So that's why the board of directors need to have a financial business and banking business skill, at least a focal views. So they don't need to prepare the financial report, but they need to be able to understand what are the basic balance sheet reading, how to read the balance sheet, and how to interpret the balance sheet. And they, if they not, they have to acquire the necessary skill. I think this is that is why some of country has compliance once or before or after. They have to go through continuous education process. So without that, depending only the chairman is a very, very bad position. It is going to be a risk. Another one is commitment, that they need to have a certain time to share and come. And another one is the board of directors need to, if they failure to attend for the board meeting, basically consecutive one time, two times, three times, I think there should be a very clear policy. There's no meaning of holding that position for them. And that some people, I am aware that they are not in the same village and they are out of the country, but still they are holding the position. I think this is type of malpractices we have to remove. The board must respect the decision of the board, and even if you have different views, once we agree with the decision, everybody has to approve that. So this is how everybody both speak on one voice. So this is how I like to explain. And once again, I summarize board of directors. Uh, Governance is a very, very important part. The members' money, safe and sound, is depending on how do you maintain the good governance. It's external, internal, individual, and again external. There are three: transparency, compliance, and public accountability. And internal, structure, continuity, balance, and accountability. And another one, individual, integrity, competency, and commitment. So once again, thank you so much for joining. I'm sure you might have a lot of practical issues. Kindly post it the question and come to the ACCU platform and we can share with it. Thank you so much.